Stop. Before you put even $1 into the stock market in 2025, you need to watch this entire video. I'm about to show you why most beginner investors lose money and the hidden risks that nobody talks about. Welcome to Money Flow Labs, where we give you the honest truth about investing without the sugarcoating. I'm your host, and if you're thinking about investing in stocks but don't want to learn the hard way by losing your money, you're in exactly the right place. Here's what most investing videos won't tell you. The stock market in 2025 is fundamentally different from even 5 years ago. AI trading, retail investor apps, and global economic factors have created both incredible opportunities and dangerous traps for new investors. By the end of this video, you'll understand exactly what you're getting into and whether stock investing is even right for your situation. Let's start with the basics, but I'm going to explain this in a way that actually makes sense. The stock market isn't some mystical money machine. It's simply a place where people buy and sell pieces of companies. When you buy a stock, you're buying a tiny ownership stake in that company. But here's what beginners don't understand. You're not just buying and selling with the market. You're trading with other real people and sophisticated computer algorithms. Every time you buy a stock, someone else is selling it to you because they think it's going to go down. Every time you sell, someone thinks it's going to go up. One of you is going to be right, and one of you is going to lose money. Think about that for a moment. When you're buying a stock because you think it's a good investment, the person selling it to you thinks you're wrong. This isn't a game where everyone wins. It's a zero-sum competition where your gain is literally someone else's loss. Now let me show you the 3 biggest mistakes that destroy beginner investors. Mistake number 1, emotional investing. Beginners buy when they feel excited about a stock and sell when they feel scared. This is exactly backwards. Professional investors buy when others are fearful and sell when others are greedy. If you can't control your emotions, the stock market will eat your money alive. Mistake number 2, trying to time the market. New investors constantly try to buy at the bottom and sell at the top. Even professional fund managers can't do this consistently, but somehow beginners think they can. Market timing is a loser's game. Even if you're right occasionally, you'll be wrong more often than you're right. Mistake number 3, following hot tips and trends. Let's talk about something you'll hear a lot about: stock breakouts and market signals. A breakout happens when a stock price moves above or below a significant level, often leading to continued movement in that direction. But here's what beginners don't realize. Most breakouts fail. Technical analysis, reading charts and patterns, can be useful, but it's not magic. The patterns you see on stock charts are created by human psychology and market dynamics. But they don't guarantee future results. For every successful breakout trade, there are several failed ones that cost investors money. Market signals like moving averages, support and resistance levels, and volume patterns can provide helpful information, but they're not crystal balls. Professional traders use these tools as part of comprehensive strategies that include risk management and exit plans. Beginners often focus on the signals while ignoring the risk management. Now for the big question: is stock investing actually worth it in 2025? The honest answer is, it depends on your situation, timeline, and expectations. The stock market remains one of the best ways to build long-term wealth, but only if you approach it correctly. If you're looking to get rich quick or make up for lost time by taking big risks, the stock market will likely disappoint and possibly devastate you financially. However, if you're willing to invest consistently over many years Accept that you'll have both good years and bad years, and focus on owning pieces of quality companies rather than trying to outsmart other traders. Stock investing can be incredibly powerful for building wealth. What makes 2025 particularly interesting is the accessibility. You can start investing with tiny amounts of money and access professional quality research for free. But this accessibility is also dangerous because it makes it too easy to make impulsive decisions. If you've decided that stock investing makes sense for your situation, here's exactly how to start safely. Step 1. Build your foundation first. Before investing a single dollar in stocks, make sure you have an emergency fund and no high-interest debt. Investing while carrying credit card debt is like trying to fill a bucket with holes in the bottom. Step 2. Start with broad market index funds, not individual stocks. An S&P 500 index fund gives you ownership in the 500 largest U.S. companies with one purchase. These funds eliminate the risk of picking the wrong individual stocks. Step 3. Use dollar cost averaging. Instead of investing all your money at once, invest a fixed amount every month, regardless of whether the market is up or down. This strategy helps you buy more shares when prices are low and fewer when prices. Step 4. Start small and increase gradually. Begin with whatever amount won't cause you stress if it temporarily loses value, maybe $50 or $100 monthly. As you get comfortable with market volatility, you can gradually invest more. Step 5. Automate everything to remove emotions from the process. Set up automatic transfers and purchases so you're not making emotional decisions based on daily market movements. Remember, successful investing is boring. It's not about finding the next hot stock or timing the market perfectly. It's about consistently buying pieces of quality companies and letting compound growth work over many years. Action plan and closing. Here's your action plan if you've decided that stock investing is right for your situation. First, educate yourself thoroughly before investing any money. Start with your employer's 401k if they offer matching. This is free money. Then consider opening a Roth IRA for additional tax-advantaged investing. Begin with broad market index funds with low expense ratios. Develop a written investment plan that includes your goals and what you'll do during market downturns. Start small, stay consistent, and focus on time in the market rather than timing the market. Which part of stock investing concerns you most? Drop a comment below and let me know your questions. If this video helped you understand the realities of stock investing, hit that subscribe button. Every week at Money Flow Labs, we share honest financial education without the hype. Remember, investing isn't about getting rich quick. It's about building wealth slowly and steadily over time. The sooner you start with the right approach, the more time compound growth has to work in your favor. Thanks for watching, and I'll see you in the next Money Flow Labs video.